It is 2026. Can you believe it? And let's figure out what the market's going to do this year. Let's get into it. Hey guys, how you doing? Werenka here. I'm the state of Michigan broker for Simply Home. We're one of the fastest growing real estate companies in the country, and I've got an all-star team. So whether you're looking to buy, sell, invest, rent, whatever you need, we've got you covered. We even do property management now. So this year is already shaping up to be a little bit unusual. Like usually you can kind of see where the market's been, predict what the market's going to do, and it's, pretty easy to sound really smart at the end of the year because there's usually not that many forces that are going in opposite directions that could make the market go one way or the other. This is not one of those years. So I'm going to do my best to predict what I think is going to happen here over the next 12 months. And it'll be really nice if I look back in December and sound really, really smart, but I'm not counting on it. So here we go. Let's check it out. So this business is all about supply and demand. So let's start with inventory levels. Right now, we're quite a bit higher on inventory than we have been for the past 5 years, but we're below where we were in 2019. So prior to COVID, our market just had a lot more inventory than it does right now. So since COVID, we dropped off a cliff. And if you remember, or you go back and watch it, if you've been watching this channel for a while, 2022, 2023, 2021 was super, super low inventory. That's when we were like advising our buyers to just, throw your absolute best offer. I'm never I'll never say don't get an inspection, but a lot of buyers were doing exactly that. They were waiving their inspections and just to get the opportunity to get a property under contract. Because like every nice house, you were going up against, 10 or 15 other offers. It was absolutely insane. Luckily, we're not in that market anymore. But that being said, we're somewhere in that middle area. So we're not like super low on inventory anymore. We're definitely not as high as we were pre-COVID either. But we're starting to kind of creep back into that range. We're like almost exactly halfway in between 2021 and 2019, if that makes sense. So in terms of inventory. So we've got a more healthy market than we've had. And I guess since this video is a prediction of what's going to happen, I guess if you put a gun to my head and say, where's inventory going to go? I think it's going to rise for several reasons, which we'll talk about here in a minute. And then the next question, which is the one I get from most people that are asking like a specific question about the real estate market, is about mortgage rates. So again, if I had to guess, I think they're probably going to continue to fall throughout 2026. I think we're probably going to, we're definitely going to have a new chairman of the Fed at some point this year. I think it's May is when the new Fed chair will take over. Almost definitely is going to be someone who cuts rates. That being said, I know it's the entire board that votes on it, so we'll see what happens there. But I think we're going to continue to see interest rates continue to fall slowly but surely throughout the course of the year. I don't think we're going to get a drastic, big cut, but I think the rates are going to keep coming down throughout the course of the year. Right now, we're just a hair above 6%. We're like 6.16, I think, is the average right now. And this is the first week of January. I'd expect us to settle somewhere in the mid to high fives by the end of the year, like 5.75, something like that. I think is probably where we're going to end up. That being said, who knows? It's anybody's guess, but just judging on a whole bunch of different factors, I think that's where we're going to be. Now, here comes a long shot prediction, because this one there's so many competing forces. There's forces that should be driving the market up. There's forces that should be driving the market down. I don't know which one's going to win out yet. So as far as what we can expect from average sale prices from now till the end of the year, I think they're going to mostly hold steady. That being said, if they end up appreciating quite a bit, I'm not totally shocked by that. And if they end up depreciating by quite a bit, I'm not shocked by that either. But I think the end result of these forces that are kind of counteracting against each other is going to be keeping average sale prices. I mean, they're going to fluctuate a little bit because they always do, just depending on time of the year. but I don't think we're going to be like substantially higher or lower than we were in 2025. Lots of things can happen between now and then. Keep watching this channel because obviously I'm going to be reporting back. But I think right now my prediction would be I don't expect average sale prices to fluctuate more than a couple percent from where they are right now. So let's take a second to talk about why we think prices are going to kind of stay the same and what those forces are that are fighting against each other. So the number one thing that I'm looking at right now, the number one metric that I'm checking like obsessively is the employment numbers, because that seems to be like kind of an underreported maybe part of the economy that would probably affect the real estate market more than anything else. And it's looking a little bit shaky right now, and there's lots of reasons for that. But, the development that we haven't had in the past that we have now is the rise of AI, which, normally the unemployment rate goes down. It's going to be then more than not affects people at like kind of the lower end of the employment spectrum. But AI is coming for white collar jobs. So, it's still a long way off, from really taking over. But that being said, I mean, that kind of technology a long way off might be 3 months from now, who knows? But, it's there, attorneys, accountants, like professions like that are, require a college degree, white collar jobs. And we have an awful lot of those here in Metro Detroit with, 4.5, 5 million people that live here. That could definitely negatively affect some higher income earners, which will definitely have an effect on the real estate market. That being said, like I said, AI is still relatively in its infancy. It hasn't been adopted by that many people. It's something that we use every day, but most people tend to not like it very much. So we'll see what happens. I mean, that's the biggest question mark over all of this. And that's the thing. I'm not in a position to say one way or another what I predict is going to happen there. I just can look at it, see what it's happening right now, and kind of infer where we're going to be 12 months from now on that end. And that would be the biggest kind of red flag for me is, if we start having a lot of white collar workers get laid off, that's definitely going to affect the real estate market. The other thing I'm looking at in terms of employment is the auto industry. Because, we've talked about this before on this channel, but, GM laid off an entire shift at Factory Zero. I know we've had some other layoffs in the auto industry, and, that's definitely something that will negatively impact our market more than anywhere else in the country. But, to date, we haven't had that. It's not like we've had like mass layoffs or anything, and hopefully we won't see that. And the only other like real potential negative impact on the economy that I'm seeing is in inflation. So I know the most recent numbers came back and it cooled off a little bit. I think it came back at like 2.7%, but the Fed's target rate is under 2. So we're definitely, prices are definitely not going down. So, the more people spend on goods and services, the less money they have to spend on their home. So for that reason, that's like one of those things that could be pushing average sale prices down. That's going to be counteracted a little bit, I believe, if we do see a decrease in mortgage interest rates. That'll definitely help. But, again, hopefully we get a handle on it and it drops back down and it stops being a kind of a negative in everybody's life, but we're not there yet. So that's one of those things. Employment and inflation are the two biggest things I'm looking at that will impact our housing market locally here in Metro Detroit. And then compared to the rest of the country, we definitely have some pluses in our neck of the woods that a lot of people don't have. First and foremost is our price point, which is substantially lower than most of the rest of the country. I mean, it's a not the world's best example, but I'm going to use it. So say, a 1,200 foot starter home in, say Madison Heights, just built in the 1950s, three bedroom home, whatever. You can pick one up right now for about $170 to $225, depending on interior finishes, $250 for a really nice one. You take that same house and you drop it in Miami, and we're looking at like a $750,000 to $800,000 home. So just getting in the door is much, much easier in our market than it would be in a lot of other parts of the country. And that's why we've seen such a decrease in average sales price in a lot of parts of the country. I know like California is down quite a bit. Markets like Seattle have seen a big decrease. New York City, Florida is a big one. So, it's one of those things where, we don't have to worry about that. At least it's much easier for our first time buyers to get into their first home than it is in a lot of different parts of the country. Another plus in our local economy, which hasn't been the case for any, and I'm not necessarily predicting a downturn or anything like that, but in the case that we do have one here in the area, our economy was not nearly as diversified, previously as it is now. So there's a lot of other, tech industry, mortgage industry has really come in with UWM and Pontiac, Rocket Mortgage in Detroit. It's not 100% tied to the auto industry anymore like it used to be. So even if the auto industry takes a hit, we're definitely going to feel it here, but it's not going to be catastrophic. Like, it's not going to be a 2008 type thing, because we're not tied to one industry anymore like we have been traditionally for the last 120 years or so. But at any rate, long story short, that's my roundabout way of saying that I think the market's probably going to hold steady. I think mortgage rates are going to come down, making homes more affordable. Wouldn't be surprised if inflation keeps going up, making everything else less affordable. So I think we're going to probably have a status quo type year in 2026. That being said, there's a ton of white noise in all the metrics, everything going on right now. So best advice I have for you is keep checking this channel, because as things change, I will be reporting back. I'm going to be doing a lot more of these, just little like single topic videos. But keep checking the monthly market updates as well, because that is much more comprehensive. I don't want to bore everybody with, things went up 2.3% and down 1.1%. It's like not as many people care about it. A lot more people ask for just kind of like general, hey, what's going to go on in the market? So here we are. But I truly appreciate you guys checking this channel out. Like and subscribe if you feel inclined to do so. I will be back much more frequently this year with more updates. And as always, if there's anything you guys ever need, you can reach out to me directly, call or text anytime. Direct line is 586-491-5622. You can email me at Werenka@simplyhome.com. I'm on all the socials. Just message me. I'll respond back to you quick. And as always, I hope everyone has a fantastic 2026. I truly hope this is the best year of all of your lives. And anything that I can do to enhance it and make it better, just say the word. That's what I'm here for. Thank you so much, guys. Have a great one, and we'll talk soon.